What's going on, guys? Welcome back to the channel. Welcome back to another video. If you guys are hanging out with me for the first time, please consider subscribing to that channel. And while you're at it, go ahead and drop a huge like for the video. I would really appreciate it. So next week, actually in a couple of weeks, the Federal Reserve is going to be having another critical meeting about whether or not they will be raising interest rates as they attempt to bring down inflation. Now, what are we going to be doing? What is the stock market going to do? I've been watching the stock market, and we're in this really interesting place right now. And I think that we could either go significantly higher from here, or the stock market could crash. But either way, I have a plan. Now, unfortunately, most people right now, based on statistics, based on what we're seeing, economists are actually indicating that the average American could not even handle an unexpected $400 expense. And most Americans would need to go into debt to cover a unexpected $1,000 expense. Now, if you want to build wealth, and I'm a huge fan of the stock market, if you guys had noticed, and the reason why is because this is one investment that has really changed my life. And I'll never forget the first time I invested in my 401k. There was this guy at work, and I was like in my early 20s, and it was an older guy, and I was asking him. I just assumed that he knew more than me because he was like 20 years older than me, and I was telling him, I was like, "Yo, our company offers this 401k. It seems like almost like easy money, but I didn't know anything about it, and it was my first time ever investing in a 401k. So I asked him, and he laughed at me and basically told me it was a joke, it was a waste of my time. 401ks are a scam. Okay, well, thankfully, I didn't just take his advice. Thankfully, I did more research on my own, and I convinced myself that it was a good idea. Anyway, long story short, I ran in. He actually, we worked together for years, and he came to my desk one day to ask me a question while I was looking over my investments. Now, this is like a couple years later, and he was like, "Dang, big baller," and I was like, "What are you talking about?" I actually had one. I had multiple monitors, and one of the monitors had my 401k balance up because I was checking. I was doing my research and looking at the performance. So then he was like, "Dang, big baller," and we started talking about what it was that he was looking at. I was telling him it was the 401k account that I had asked him about 2 years before, and so he was like, "Are you serious?" I was like, "Yeah, like, I mean, I know you said it was a scam, but I did my research and I felt confident that it was worth investing in." So we started talking about it. Long story short, he was like, "Dang, I didn't even understand." He was like, basically, he heard from a friend of his that that 401ks are a scam and that they're not worth anything. And he had a friend that had lost money or something like that. And I was like, dude, you only lose money in the stock market when you sell when your assets are down. So just don't sell when your assets are down. Simple as that. I don't put every dollar I have in that stock market. I have other types of investments, and it's just smart to not put all your eggs in one basket. But anyway, the S&P 500, if you look at the last 20 years, is giving you an 8 to 12, anywhere from 8 to 10, maybe even 12% rate of return on average. Um, Collectively. Now, some years are going to be higher than others, but what I learned is this: if you want to build wealth, you got to make it a priority to pay yourself first. Period and point blank. We receive a salary, and many people have a tendency to go out and buy things, but unfortunately, we end up paying ourselves last in most cases. Well, most people, including myself, I spend a lot of my time making other people wealthy. It is about time that we start taking charge and we make ourselves wealthy. By the way, if you guys made it this far in the video, go ahead and drop a huge like for the video. Also, subscribe to the channel. I would totally, totally appreciate that. Now, aside from savings, um, you know, putting some money away for savings should literally be a priority. And some people say, most financial experts will say you need to put 10% away. I I think in this economy, that's just not enough. I feel like in this economy, if you want to build wealth, I would be putting away at least 15, if not 20%, and I would continuously work to increase how much of a percentage of my income that I'm able to invest in the stock market. Now, how do you invest in the stock market? the simplest way is to open up a brokerage account, M1 Finance, Webull, E-Trade, Fidelity, Charles Schwab, name your favorite online brokerage company, open up an account. And I'll do my best to leave some links for you guys in the description down below. And literally just start making contributions to this account. Put money in the account so that you can make investments in the future. Now, what do you buy? Well, obviously you need to do your own homework, do your own research. But one of the things I like to buy is index funds and ETFs. Reason being is I don't have to be the expert when it comes to these investing in these different companies. I just don't have to be the expert. And I don't have to study all of these different companies on a regular basis to make sure that I'm in the know of every move and transaction that these companies are making. So I like index funds and ETFs because I let the experts manage the investment on an automated process for me. Another thing I'd be doing is I'd be creating a habit of saving money. And most people save money and they lose money by doing this. Me personally, when I say save money, I'm saving money aside for a purpose. I don't save money just to let it sit in a savings bank account. Like I'm not going to become wealthy letting a significant amount of my portfolio sit in my Bank of America savings bank account or my JP Morgan Chase savings account. That's not how I'm going to build wealth. But if I allocate money to savings, then that is money that can then be redeployed and invested into the stock market. All right. And I like to also set short-term goals, specifically short-term financial goals. This will allow me to not have to go into debt to make purchases. And I could also create goals to be able to reach financial objectives that I may have set for myself. But going back to reducing your expenses, it's just like what a business is going to do when it needs to improve or increase its profitability. It's going to cut its expenses. So if a business sees that its revenues are down, chances are it's either going to make some investments that can increase its income, or it's going to look to reduce its expenses. And we, as individuals who are trying to build wealth and achieve financial freedom, we need to be looking at our personal finances the exact same way. How does a business reduce its expenses? Well, it'll go through its list of expenses and renegotiate contracts, restructure debt, eliminate services that it's paying for, eliminate employees that it's paying for. This is why we're seeing layoffs here. And so how do we do this as an individual, as from a personal finance standpoint? Well, we can cut down our own bills, renegotiate that cable bill. If you don't need cable, cut it off. Now, some people will quote unquote need cable because maybe your cable is attached to your internet, and we need internet, guys. This is how you make money. If you don't have an internet connection, it's very difficult to make money online. Now, granted, you could, hang out at Starbucks and other different places that offer free Wi-Fi to make money online, but ideally you want to be able to have internet access from your home. So I get it, but you can also shop around and tell your cable company that you're willing to cancel. If you tell them that you're willing to cancel, they're going to transfer you over to the customer retention department, and then they'll end up giving you the best deal that they can give you, because they would rather keep you as a customer than lose you over a couple dollars a month, because these companies understand that there's a customer acquisition cost to get a new customer. So if they lose you, they're going to have to pay that cost to get another one of you back. So if the customer acquisition fee, or if it costs them $500 to get a customer, they're probably willing to lose $500 just to keep you, or somewhere around that ballpark. As an example, I would eliminate all the streaming services personally. I would definitely find the least expensive, most convenient gym membership, because for me, if I don't feel good, I can't function well. So you got to feel good in order to make money. I would definitely start making my meals instead of eating out on a regular basis. If you make your meals, they're going to be healthier. You're going to have more control over what goes in the meal, and they're going to be less expensive than going out to eat. Stick to your budget. Have a budget, create a budget, and create a savings plan. and stay out of debt. Most people are paying somewhere in the ballpark. If they have credit card debt, they got somewhere in the ballpark of like 18, 19, 20% in credit card interest, right? That is how you make banks wealthy. That is not how you build wealth. That's one of the reasons why most people are having a difficult time becoming independently wealthy. So we have to make sure that if you have debt, like if you have debt on real estate and that real estate's making you money, that's good debt. There's a difference between good debt and bad debt, consumer debt. So real estate debt, if it's generating you passive income and that asset, that real estate is increasing in value, let's just say your debt payment or your mortgage payment is somewhere in the ballpark of, I don't know, $1,000 a month, but you're renting that property out for $1,400, $1,500 a month, you're making 50% on your money on a monthly basis. Like your cash flow is positive $500. That's the kind of debt I'm holding on to, and I'm in no hurry of paying that debt off. So real estate is another great investment in general. And if you look at the history of real estate has always gone up over the long term. Now, of course, there's pockets of time. If you look at 2008, 2009, 2010, real estate values went down. We've also seen real estate go down recently. But guys, I'm not buying real estate to hold on to it for 1 year. I'm not a real estate flipper. I'm a real estate investor. And so I'm investing in these assets for the long term. And so much like the S&P 500 and investing in the stock market, I'm not trying to trade these assets anytime soon. So these are long-term investments. Not to mention, as a real estate investor, we get all sorts of different benefits from a tax standpoint. Now, I'm not a tax advisor at all, but you get benefits. Check with your CPA, check with your own tax person. But real estate offers depreciation. And what this allows you to do is you can, from a tax standpoint, claim a loss through depreciation on the property, because the property, the land improvement, goes down in value over time, but the land does not go down, right? And so the IRS will allow you to take a loss on paper even though you've profited in your bank account. And this is how the wealthy are building wealth, right? You got to invest your money wisely, and you want to keep track of your assets. So guys, this is what I would do if I didn't even have $1,000 in my bank account. I would definitely be strongly considering these options, because what I'm sharing with you guys is exactly what I did to get going. Investing in the stock market, budgeting, increasing my income, and focusing on making myself wealthy versus running out there, getting car payments, working just to make payments, working just to pay bills, and having nothing left for myself. We have to focus on learning to pay ourselves first. That is the key to building wealth. If you guys made it this far in the video, do your boy a favor, drop a quick like for the video, subscribe to the channel, share this video with everyone you know, and check out the next videos that are coming up. Y'all be safe.